Hello, good morning, and welcome to this webinar organized by the Spain-US Chamber of Commerce, in which we will talk about research and development tax credits and how your company could benefit from it. Before we begin and I introduce our panelists for today, I just want to remind that from the Spain-US Chamber of Commerce, we organize many different events during the year, and that you will be able to find all of them in our website, which is spainuschamber.com. There's a calendar of events, and you will be able to check what's going on and register for the next events that are planned. Also, you might be able to check our past events, the ones that are recorded, which usually are most of them, in our YouTube channel. You can also access through to our YouTube channel through our website. On the upper right corner, you will see all the links to our social media platforms, and there's the YouTube channel link as well. And there's a way to check on other past webinars that we've hosted in the past months. So before we start today, I would like to say that it's a pleasure to having today with us FI Group to talk about this, because research and development tax credits, it's been an unknown tool for companies to save money. And a lot of companies they think that they could not qualify for this, that in order to qualify for an R&D tax credit, they need to be maybe a clinic or a research company or focus on technology. And that's not exactly the case. So there are many different industries, some of them traditional industries, that might benefit from this R&D credits, and that's a good thing for your company. So I hope that you enjoy and get some knowledge here that could save some money for your company and for your businesses. Also, we will have a discussion, a presentation, and also we will see in detail a case study. And at the end, we will address the questions that the attendees would like to send. So if you have any question during the presentation, please do not hesitate to send those questions. And the way to send it, it's very simple. You just need to click in the questions tab that appears on your right side on the control panel, on the Go to Webinar control panel. There should be a tab that says questions or preguntas if you have it in Spanish. And you click there, you write the question, and you send the question. So we will receive all the questions and address them at the end of the presentation. Usually the presentation will take like 40-45 minutes, and we will spend the last 10 or 15 minutes addressing those questions. And now, without further ado, I would like to introduce our panelists and also to thank FI Group for being with us today and talk in detail about this type of tax credit. So for those who don't know FI Group, they are a global tax consultancy that has been promoting innovation for 20 years and considered a trusted advisor and values strong relationship. FI Group is specialized in implementation of state and federal tax incentives and research and development tax credits for corporations. With offices in Chicago, they cover all regions in the country. And now they are also expanding to Michigan, Rhode Island, and New York. At the global level, FI Group works with over 13,500 satisfied clients, managing more than 30,000 projects a year. That's a lot of projects. So with us today, we have Bruce Kletsky, Managing Director, US at FI Group. Bruce consults with a broad range of corporations to help create research and development best practice benefits. He's considered an R&D tax expert and trusted advisor to corporate industry, CPAs, bankers, attorneys, and financial professionals. Because of his expertise, Bruce works with many companies that are not aware of their eligibility for tax credits and incentives, and has been critical in helping them understand what direct and indirect activities and expenses qualify and the necessary documentation to support their claims. We have also with us Iago Tello, which is an experienced advisor focusing on innovation funding and global research and development incentives. He is considered an expert in international R&D tax incentives. Clients range from startups to major corporations from assorted industries such as technology, chemical, automotive, pharmaceutical, manufacturing, and energy. And we also have with us Nicolas Rieswald. He's managing partner from North America and partner at IAC Partners, an advisory company by engineers who partner with industries from growth strategy to product leadership with hands-on consulting services. For the last 15 years, he has been helping his clients on product cost optimization. IAC can achieve from 10% to 30% cost savings on product range or on defining your future-ready growth strategy. IAC walks the talk when it is about competitiveness improvements. So welcome everyone, and thank you for being with us today. I hope we have a very productive morning and people will leave understanding a little bit more about R&D tax credits. And before leaving you the floor, I will remind everyone this session is going to be recorded. We will share with you the presentations and the recording. And also, if you want to share that with other team members, partners, and colleagues, they could also visit our YouTube channel where this presentation will be uploaded later in the day. So without more delay, thank you. And Iago, I leave you the floor.
Thanks a lot, Juan Carlos. I think Bruce is going to do the introduction first.
Wonderful.
No problem. Thank you very much. It's nice to meet everybody. Good to see everybody. Time this is over, everybody's going to be an expert on R&D. My goal today and the purpose of our discussion is there's a misconception of what R&D is. And a real good example is we have a client who is in the construction industry. Who in the world would ever think the construction industry would qualify for R&D? But guess what? Because of our expertise, our knowledge, they obtained over a $600,000 credit per year. So the R&D has been around forever. It's been around for 40 years. It's a misconception on, watching things explode, wearing white coats, being a professor and inventing something new. Guess what? It has nothing to do with that. R&D is about business processes. And what we're going to explain today is, how do you qualify? What is the R&D credit? What's the benefit? How's it calculated? What type of businesses qualify? What type of activities qualify? Is there a risk? Is there an audit risk? That's what we're going to try to demonstrate today. The FI Group is a very large organization. We're a leader in the industry. Been around over 25 years. In Europe, Asia, South America, North America, and we have well over 13,500 clients, a huge database of information. The skill set of our team is incredible. They understand innovation, they understand engineering, science. That's what helps us obtain such large benefits for our clients. In fact, our clients are obtaining over 25% savings on their income tax. Incredible. It's the best in the United States. That's the best thing available. We developed a team in the U.S. of engineers, tax attorneys, operations. My background's been operations. I've been doing this for a long time. And we understand how to maximize the credit. We educate our clients, and we work with our clients' CPA or tax professional. I'm out of our Chicago office. We have offices in, besides Illinois, we got Florida, New York, Rhode Island. So we're a major player in the industry, and we really help our clients a lot. So next slide. The type of companies that qualify, it goes in really two sectors. One is a startup company. A startup company would be a company 5 years old or less. The government initiated new rules for startups. You could eliminate payroll taxes for startup companies. Big incentive, okay? They don't have to make money, they just have to have a payroll. Then their payroll tax will be eliminated. Also regular companies, a C Corp, S Corp, LLC partnership. What the statutes say, you can go, if you can't use the credit because of, don't have enough taxable income, you go carry it forward for 20 years, or you go back 3 years, and you possibly get refunds. Other things that FI Group helps our clients with are state taxes, energy credits, go 179D, cost segregation, companies that have property, state and local taxes, the taxes that companies that pay taxes in multiple states. Biggest incentive, though, the most robust thing I've seen is R&D. Okay, so next. I'm going to have Iago explain what the R&D credit is and how companies can benefit. And if there are any questions, please, enter in the chat and we'll answer them. Okay.
Thanks a lot, Bruce. Well, let me begin by thanking all of you for joining this webinar today. My name, as Bruce said, is Iago, and I've been working in the international business area of FI Group for almost 10 years. Our purpose here today is to explain how a business that innovates can reduce taxes, utilizing the R&D tax credit and minimize risk during the process. Right, so what's the R&D tax credit? It's a government-sponsored tax incentive available to companies developing new or improved business components, including products, processes, computer softwares, techniques, formulas, or inventions. So it's very wide. This means that this incentive is not just for major corporations, as Bruce said before, with wide codes and huge research labs, or for highly technological industries such as pharma or aerospace. On the contrary, any company in any industry that has devoted resources toward developing or improving products, process, or software, whether successfully or not, and this is very important, could claim the credit. This credit was introduced in 1981, and the purpose was to increase technical jobs in America by encouraging business to invest in innovation, and was meant to be a temporary measure, but proved to be very successful, and the credit was extended by Congress more than 15 times, and it was made permanent in 2015. So the credit is a well-tested opportunity for companies to increase their cash flow, return on investment, and for reducing federal and state tax liability. Let's continue talking about the basics of the incentive. So regarding the return, which is a very interesting part, the average potential benefit of the federal and state credit combined is in the range of 10–20% of qualified spending. So a business who spends $100,000 in eligible expenses could get back $10,000 to $20,000 when following the correct process. How do we calculate the exact amount a business can claim? Well, without entering into much specifics, because this is an informative webinar, but there are two methods for computing the credit, the regular and the alternative simplified. The two methods are the same in that they both calculate the credit as a percentage of the excess of qualified spending in the year for which the credit is being calculated over a base amount. For this reason, these credits are sometimes called, and you will find it, incremental credits. As the alternative method is the simpler, of the two calculations, it often becomes the chosen one. However, it does not always produce the maximum benefit. So we recommend simulating both approaches to determine which of the two yields the best results for your business, and then choose the one that is better for you. As for the claiming process, it is important to note that the incentive is self-assessment. So it is the responsibility of the taxpayer to follow the IRS established process, to provide accurate information that can support his claim, and to make sure the defense file is solid in case an IRS audit happens. As an example, for a business that uses a calendar year, the R&D tax credit must be filed before March 15 or September 15 if they opt for the extension period. And taking into consideration the utilization, we can carry forward up to 20 years any unused credit and go back 3 years to amend previously unclaimed amounts. Even better, companies with net operating losses in the past may be able to go back even further. It is important to note as well that most of the states also offer a research credit using their own formula and criteria, but following the federal scheme. So a business could benefit from both federal and state at the same time. And focusing now on the payroll tax credit, which was introduced in 2015 as an improvement of the tax credit regulation, and that allows business and startup companies, provided of course they are eligible for the credit, to apply the R&D tax credit against their payroll taxes for up to 5 years. This means that a company that has no taxable income but is innovating can still take advantage of the credit. To qualify for the credit, a company mustn't have gross receipts prior to 2016 and must have less than 5 million in revenue. The income tax application and the payroll application of the credit could be combined, making the incentive even more powerful for startups. Sorry. And getting into a specific on how a company could make sure their activities qualify for the credit. Regardless of the industry, companies are potentially eligible for the R&D credits if their activities meet the requirements established by the IRS and known as the 4-part test. First, we have qualified purpose. So the objective of the activity must be to create a new or improved product or process, including computer software, that results in increased performance, function, reliability, or quality. It must be also technological in nature, relying on the principles of hard science. And it must follow a process of experimentation, undertaking to eliminate or resolve a technical uncertainty. It is important to note that if a company develops software for internal use, it could be considered for the credit, but additional tests, additional thresholds need to be passed. And let's get into the activities that do qualify for the credit. We wanted to show you some examples of them. But let me state that if a company is taking a risk by improving or developing a process, product, or service, then it is likely that it will qualify for the credit. What constitutes R&D regarding the credit is much more expansive than business owners realize, with activities related to applied sciences and other technical projects qualifying companies from many different industries. Some examples that could apply to many industries would be designing and developing operational processes, determining tooling requirements, constructing product prototypes, reducing labor cost, achieving compliance with regulations, or even increasing manufacturing capabilities. So as you see, it's very wide as well. But it's very important to be aware during the identification process that some activities are excluded from the credit. For example, the research that is conducted after commercial production, the adaptation or duplication of existing business components, any research related to management or not based in hard science. And of course, as this incentive, it was meant to increase R&D in the country, any foreign research is also, it does not qualify for the credit. Especially important is to carefully consider as well that research funded by any grant, contract, or by another entity cannot be included in the credit. This means to carefully evaluate who bears the technological and financial risks in a project, and who owns the intellectual property. And let's get into the type of expenses that a company could include in the claim. Well, this is a people incentive designed to avoid the outsourcing of technical jobs to foreign countries, to other countries. So salaries, wages are normally the most relevant part of the claim. So eligible R&D costs include taxable wages, and this is very important, including direct support and first-level research supervision, which makes a very powerful part of the incentive. Also supplies that are used in the research, not including capital items or general supplies, but all the supplies like materials or prototypes that are used during the project. And contract research as well, third-party research, taking into consideration that the payment cannot depend on the results. And in addition, the taxpayer must have substantial rights in those results, and only 65% of this cost can be included on the credit. I would like to talk now about the recommended process when taking the credit to maximize returns and to minimize the risk. First, it's recommended to get technical and financial inputs and identify all the profiles who are going to be involved on the process. Then, in phase one, the key is to identify all the qualifying activities and to collect all the documentation to support the claim. In the execution phase, the defense file that will provide fiscal security and minimize risk in case of an audit is built and validated. And finally, a technical and financial report is completed, and the claim can be filed to generate the final deduction. And finally, to round up, I would like to state that technological innovation is the main driver of long-term economic growth, and the R&D tax credit remains as the best tool to reduce federal and state tax liability for any business that innovate. With the payroll applicability, startups with no taxable income can benefit too. And foreign companies who are planning to develop technical activities in US soil should consider this incentive in their projections as well. Despite of the complexity of the incentive, there are ways to reduce risk, and we encourage every business that is developing or improving products to take advantage of this incentive. Finally, and as a thank you for attending this webinar, FI Group, we will be sending our brand new international R&D guide to all the attendees. And this guide will provide an overview of the R&D incentives worldwide, not just in the United States, but in the 20 countries that we have operations. And thanks a lot for your attention, and back to you, Bruce, please.
Okay, Iago, thank you. Excellent. If there's any questions, please, identify those in the chat. I want to summarize real quickly, then I want to introduce our guest. Number one, what is the credit? The credit rewards companies that innovate or hire or retain technical employees. Okay, that's it. Basically it's a jobs credit. Okay. Number two, what is the benefit? Very simply, it reduces state and federal income tax. If you're a startup, it reduces payroll taxes. That's it. Okay. How is it calculated? Calculation, it's a 14% credit against qualified expenses. Expenses are wages. Also supplies and computer software cost. Okay, that's it. It's real simple. Types of companies that qualify, it's anything from software, engineering, construction, architectural firms, manufacturers, tool and die, transportation, logistics. The list goes on and on. So a range of companies do qualify. Is the R&D risky? Yes, it can be audited. Right now, over the last 2 or 3 years, IRS has audited less than 2% of companies that take the R&D credit. So it minimizes the risk is not there. Okay. The key is to document all R&D activity, and that's what our professionals do. So it's kind of simple. Okay, it's a jobs credit. Okay, I want to introduce you to the managing director of IAC Partners. IAC Partners is a global engineering consulting firm, very successful. They're one of the leaders in the industry, and Nicolas and I were introduced to each other about a year or so ago, and he had experience the R&D credit in Europe, and he wanted to see if his company would qualify. And we did an analysis, and the benefit was really probably exceeded expectations. Okay. That being said, Nicolas, welcome. Tell us about what IAC does, and your experience in the R&D, and why do your clients hire you? So.
Yeah, sure. Thanks a lot, Bruce. Thanks, Iago, Juan Carlos, and everyone. Thanks for attending. And I will try to keep the smile, even though French soccer team lost yesterday. But go Spain now. We would have loved to play against you. So nice to meet you, Nicolas Wiesveld. I'm 15 years now. I'm working for IAC Partners, and after 13 years spent in Paris office, in the headquarters, I moved to Chicago office to run the business in North America. So as everyone said, Juan Carlo, Iago, and Bruce, we advise companies on their growth strategy and on how to develop their products and solutions in a cost-effective and innovative way. So we address a bunch of different spaces, from aerospace, defense, automotive, energy, medical devices, to help them to achieve their goals. That could be also in their carbon footprint reduction goals, for example, or increase of performance on some of their devices and solutions. So as Bruce said, yeah, I think it's about 10 years in France. We use FI Group to benefit from this R&D tax credit that exists in France as well. And I must say, because I was in charge of the reporting of this documentation in France, that it's very, very time-consuming and very intensive work in France, and a lot of documentations and justifications and demonstrations you have to give. And when I met Bruce in Chicago, I figured out that it existed in the US first. So I was curious about it, because we still do the same job in the US than in France. And talking with Bruce and his team, I figured out that the process was much simpler than in France. benefit from this R&D tax credit or payroll taxes if you are a startup like we were. It's a matter of spending 4 to 5 hours with Bruce and his team on providing, of course, the roster of your employees working on supporting R&D projects at our clients. If you track your activity properly with any tool, you have the amount of days, hours you spent on this project, and you can easily relate it to the payroll associated to it. And once it's done, you need to provide a very high-level documentation on these projects, explaining what was the goal and how it fits with eligible, let's say, activities of R&D tax credit. So after this, it's about 2 calls of 1 hour each. Then you have to explain and transfer that to your accountant or CPO, whatever, CPA, and they ask a bit of questions on how to file it properly, what kind of forms they're gonna have to use if they are not used to that. I don't know the numbers. Bruce and Iago could tell it, and then they file the tax return at federal and state level, including these new forms that says that we will benefit from and much thousands of dollars on the payroll taxes. So very few tasks to do, and it's very applicable to our company. We are of course a consulting company by engineers. Doesn't mean that we do draft, etc. all the time, but we support our clients on R&D projects, and that's enough to fit in the eligibility requirements of this R&D tax credit in the US. Very much simpler and very effective. I mean, it was immediate first tax return. We benefit from the tax credit, so very happy to do it and to renew it every year, because we keep on doing the same activities. Much more now are eligible since we are working a lot on this carbon footprint reduction. It's a lot about looking for the right technologies to achieve the goals and innovate on the most effective way to achieve it.
Nicolas, tell me about what type of documentation requirements or activities did you have to provide our team?
So on the admin part, it's mainly payroll reports, so very easy to access in any company. And on the project side, it's extract or complete report of steering committees, for example, of our projects with our clients, where you have descriptions of activities and results that were achieved thanks to a job. Yeah, it's documents I did not customize at all for FI Group. I just reused what we use for our clients. These are real documents that we send to our clients.
Yeah, that's a very good point, because the R&D is a misconception of R&D, and the definition used to have contemporaneous documentation. The IRS and the Department of Treasury changed that. Now we could use oral testimony. We could interview the employees and the management, the leaders of IAC, and what we do is we will record the conversation and we'll document it. They'll explain, what do you do for your clients? Why your clients hire you? And that is acceptable. So it becomes simplified. Okay, I don't need the contemporaneous documentation anymore. I don't need. I can use emails. I can use project reports, prototype lists. All activities that you do daily. Okay, that qualifies. Okay.
Exactly. It's really easy. If I think of right now, this month, for example, we are working on a project for a big energy player on defining the roadmap of their green technological strategy, including the research for our partners and technologies and assessment of the benefits in terms of performance improvement and carbon footprint reduction with the cost associated. And we will use the steering committee report as a documentation.
Now, was your accountant, CPA, your trusted advisor, were they part of the process?
Yeah, they were part of the process, and I had to check that with them because I was new on the US market 2 years ago. So I didn't know it existed, first of all, and I was not at ease with all these taxes issues or questions that might arise. So you have to trust someone, and okay, I met Bruce. He explains to you that it could work, it's great, it's wonderful, it goes simply. But then it's about money, so your accountant should agree with that. And I asked them, you had the call with them, they ask 3-4 questions just to check how it works exactly, and demonstrated that perfectly, and they signed it, and they put the figures, and they took your form to file a return for IC partners. So very, very easy, matter of total of 4 or 5 hours.
Good. Yeah, one of the things that try to accomplish is we want to educate you, your team, your CPA on what is the definition of R&D, what activities qualify, what doesn't qualify, what's the risk, and more importantly, can you use the credit? Okay, and what we try to do is save time in the beginning. In the event you can't use the credit, maybe it's in your best interest not to do it, which is okay, but there has to be a benefit. So these are what we do is ask leading questions to find out what financial structure our clients have. Can you go back to prior years? Do you have to amend? If it's a flow through, an S Corp LLC partnership, it flows through to the shareholders or members. But we got to make sure we understand if they're active or inactive, so that we understand where the benefit is. And these are just leading questions we do on what we call a kickoff call, and so that we maximize. Everybody's busy, so I don't want to waste time if if you can't benefit. So that's why we do the initial interviews with your people and your CPA. It's very important. So.
Yeah, you said it. The big thing is the misunderstanding of what is R&D, what is considered as R&D in North America. I don't know all the countries where you work for. It's totally different.
Yeah.
Much more activities that fit into our R&D activity.
Mm-hmm. Yeah, it really, any company that customizes or has a process improvement qualifies. Yeah. And you know what? Failure is good. You get rewarded for failure. All the projects don't have to work. Or if you innovate, it doesn't have to be successful. So it's and we help with the documentation. Documentation is we have a format that is very transparent and makes the process very simple because everybody's so busy. So you're running your company and you don't want to spend time you don't know what R&D is. So
yeah, especially when you're a startup like we were. You are, let's say, maybe reluctant at the beginning because you don't know and you don't want to take any risk. So once the uncertainties and questions are being answered, it's really easy and it's maybe minimum of time. And for startups like us, just beginning the business, saving on payroll taxes really help a lot. And especially last year during the pandemic year, so it was very interesting.
And guess what? You can get it every year.
Yeah.
It's not just one time.
I won't change my activity, so I count on you this year as well.
I know. What we try to do is manage expectations. That's why we ask some leading questions in the beginning. I need to find out how much time our client's leadership and from a technical and financial aspect are. and we structure, kind of the review according to our clients, availability. So, and we educate your tax professional also. I mean, they do accounting. This is more of an operational credit. So we understand business. Our team understands business operations from the engineering standpoint, software, the technical end of it. So, okay. In the audience, are there any questions that
Hello.
Our team could ask, or I hope
Yes.
this was helpful. So
yes, sure. We have some questions. We have a couple of questions that we are going to start addressing right now. So first question that we got here, it's from Joaquin. Let me open this up so I can read it to you. So Joaquin says, let's suppose that we have a project funded 50% by US federal or state entity, and my company needs to contribute with the other 50%. Should our contribution eligible for R&D tax credits?
if any of the activity is, if the people doing the activity are in the United States and they're paid on W-2 box, what called W-2 box 1 wages, they qualify. I don't care where the IP is. The people have to be physically and paid in the United States.
Okay.
Okay. If some of the activity is done in another country, with people located in those countries, I cannot get it qualified. I hope that that addresses it. So.
Yeah, thank you so much. And Joaquin also has another question. He says, is the acquisition cost for a license for technology an eligible R&D expense?
If it's if you get a patent, a trademark, all attorney costs are an R&D expense.
Okay. Wonderful. Another question that we got here, it's about something that was mentioned by Iago during the presentation. So the question is, would qualify a software developed for a third party, for a client, or who benefits there, the developer or the client? Because that's something, I think it's an interesting question. No, if you're a company that you develop software for someone else, who gets the credit?
Iago, you want to answer? I can answer. Now, whoever owns the software, who owns it, who assumes the risk?
Okay.
That's, I mean, the question is, you always ask who assumes the risk when you're developing software. What happens if it doesn't work? If the software is developed, who's going to own it? How do they pay for it? When the project is done, does it go to the client? Does it go to the developer? What I want to do is I want to understand the process. Okay, from conception to completion. Those are the questions I'll ask to find out who gets the credit. So, and I think a simple answer, both parties.
Okay. Yes. Wonderful. Thank you so much, Bruce, for that. Another question is, are there options for R&D tax credits for companies like lawyers, law firms, and other industries like that are traditional industries that they might not see easily a match here?
That's a toughie. Those are called service companies. It's most service companies. If I asked the question about innovation and technology. Okay, did they develop software, or do they buy a software program to manage their business? Then do they make tweaks or adjustments to it?
Okay.
If that is the case, probably they don't get the credit. It's very difficult. I would say for service companies, law firms, accounting firms, real estate companies, you would get audited. Yeah, it's going to be a toughie. If they have people that develop software for their own usage, that's called internal use software. Oh yeah, let's do it. Yeah, let's take advantage of it. But if you buy someone else's development and just tweak it to meet your needs, that'll be tough.
Okay, wonderful. Thank you, Bruce. Another question that we have is R&D tax applicable to any sector and company size?
No limits, no minimum, no maximum. How's that? It could be one person, it could be a billion people. It could be any size. Yeah, and there's no minimums or maximums. So.
Wonderful. Another question that we have, it's what kind of activities the employees are responsible for are eligible for R&D tax?
Anything from testing to logistics to any type of engineering, any type of development, running CNC machines, any software activity, any engineering, any testing, improvement of yields, tooling. I mean, it goes on and on.
Okay.
So anything customized.
Okay.
Anything customized you want to look at.
Thank you. Another question is about what was mentioned in the past. So the question is, if my company could apply for these R&D tax credits now and the circumstances are the same for the past 5 years, can I request retroactively those 5 years tax credits?
From a statute standpoint, it's going back 3 years. Okay. R&D is based on projects or business activity. So what you typically do is you take the current tax year. The current tax year right now is your tax year 2020. You identify what the business activities are, do the calculation, find out what the benefit is. Then after you find out what the benefit is, you want to identify, it depends on the company structure, but you want to maybe go back, look at the prior 3 years. And sometimes you have to amend, but you might be able to get a refund. If a company has losses, I think Iago had mentioned this, you can go back to the beginning in time, so long as you can document. And so long as you can document, you could roll over the losses, carry forward to the current year or future years. But simple answers, I can go back 3 years, always.
Okay. Another question that we have, it's how it works for a company that has offices in different countries, and we develop R&D activities in different countries, but for projects that would end in one of those countries. So how can we take advantage of that? Because you mentioned before, for example, for employees, they need to be here in the United States and W-2. So what happens in those situations where maybe you have teams all over the place in different countries in the world? Maybe some of those countries have those R&D taxes as well, and might be compatible or not. So how do you work out? What's the general rule there?
It's where are the people located? Where are they physically located? If somebody's in Spain and doing work for the United States, you take the credit in Spain. Okay. There is, it's in the United States. The rule is very simple. They have to be U.S. W-2 wage employees or contractors, physically based here, paid here and it's based on the tax return. Okay. You can get it at, you can get other countries. Most countries, have the R&D incentive. A lot of times what I see is a product is manufactured in another country, then shipped over here, and maybe customized in the US in order to meet their customers' requirements. There's assembly work or contract manufacturing that qualifies. You don't have to manufacture. If you manufacture in another country and send it over here and then customize it, there's R&D.
Okay. On that specific question, does label and packaging adaptation qualifies for adaptation for the clients, or is not enough?
Yeah, I would look into, yes, I would look into it because it's customized. You're innovating. Every customer has a specific requirement. There's specific materials, there's specific packaging. There's different economics involved, materials involved, time restraints involved. All those are considered R&D.
Okay, good. Thank you, Bruce. Another question that we have is, what are QREs?
Qualified research expenses. Wages. How's that? Wages and the cost of supplies. QREs would be the biggest QRE is W2 wages, salaries, or compensation.
Including the medical insurance and benefits, or not?
No,
just salaries.
If somebody gets $50,000 a year in salary, that is their salary. That's what we want to do. Is if somebody's at $50,000 a year, we want to determine how much time do they spend on qualifying activities, which we mentioned before. The manufacturing, designing, trials, product quality, safety, those type of things. How much time those people spend on that? We take a percentage of that. All the other insurance and other ancillary benefits won't make it. So.
Okay, and another question that we have is the R&D tax credit compatible with the support from the government and other benefits that the government provided because of the COVID crisis, like the PPP loans that are also focused on salaries, or the employee retention credit that is something that many companies applied for? So it would be possible to apply for those and at the same time for those employees request the R&D tax credit?
You betcha. Take advantage of it. Yep. This doesn't happen very often. All PPP loans are qualified expenses. They can be used. Employee retention. I mean, these are separate items that companies better take advantage of it while it's here. One of the things I saw also is for startup companies with COVID, payroll taxes were deferred. Okay, with the CARES Act. Okay, they weren't eliminated; they were deferred. Well, R&D eliminates it. So it's you could take advantage of deferment and elimination. So that's excellent.
Yeah. It is.
Yep.
It's a great advantage. And you mentioned at the beginning about the startups, something about 5 years old. Can you, tell me about that?
Yeah, the definition of a startup is a company that's 5 years old or less.
Mhm.
Okay. Does $5 million in sales or less, and has an annual payroll tax of $250,000. That's it. Okay. It's a definition of a payroll of a startup company. Those companies can apply the R&D to payroll taxes and income taxes if they make money. See what happens on startups, they don't make money. I mean, they're startups. So the government changed the definition and had this payroll credit incentive, payroll tax incentive for startups. That's really who should benefit. Okay, so a good example, we've done a company that had, I don't know, 10, 12 employees, 3 years old. They got like $125,000 in payroll tax credit. It was so much they couldn't benefit, they couldn't use it all. So someone was applied to their payroll, someone was applied to income, and the rest was carried forward because it carries forward to 20 years. Win, win, win.
And last question that we have, it's if our company obtained a federal grant for R&D and we apply large part of that grant for salaries, can we also benefit from a R&D tax credit as well for those salaries?
Yep. Yes. Yeah. This is a credit, not a grant. Yeah. This is a dollar for dollar credit. And one of the things we always ask is, how is all your business activity? How is it funded? Was it funded research versus non-funded research? And who owns it? Basically, one of the questions before, who has the risk? Who owns the software? Who owns the application?
Okay.
So
wonderful. Thank you, Bruce. So
I hope that helps.
Yes, I'm sure it helped. So we have no more questions now, and we are almost on time, 1 hour to finish at 12 sharp. So let me thank again FI Group for being with us today and showing us a little bit about the R&D tax credits. Thank you, Nicolas, for being with us as well and sharing your experience about this. I hope that it's more clear for companies that this could be an option. Please don't hesitate to contact us or contact directly to FI Group in order to maybe check your case and see if you could qualify. It never hurts, and it could save a lot of money for the companies. That nowadays it's an important thing. So also I encourage everyone to follow us in our social media and check our website, which is SpainUSChamber.com. You will be able to check there our future events and also our past events in our YouTube channel as well. Thank you, Bruce. Thank you, Iago. Thank you, Nicolas. It's been a pleasure having you today.
Thank you. Thank you very much.
Everyone.
Appreciate it. It was very good. So.
My pleasure. Thank you, Juan Carlos.
Thank you, everyone.
Spanish Chamber.
Thank you. So thanks, everyone. Have a great day and hope to see you soon, very soon.
Stay well, everybody. Bye-bye.
Okay. Goodbye.